A very good morning, everyone, and to Datuk Syed Zaid, who is joining us from his office at the Securities Commission. Datuk Syed, thank you so much for taking the time off to speak to us this morning on the Malaysian capital market and what lies ahead. Ladies and gentlemen, a very quick introduction. Datuk Syed Zaid Albar was appointed as the Securities Commission Chairman on 1st November 2018. Prior to that, Datuk Syed was the managing partner of the law firm Albar and Partners. Currently, Datuk Syed chairs the Capital Market Development Fund and is a member of the board of Financial Reporting Foundation, as well as a member of the Debt Management Office at the Ministry of Finance. On the international front, Datuk Syed is the Vice Chairman of the Growth and Emerging Markets Committee of the International Organization of Securities Commissions, IOSCO, the global body of capital market regulators. He is also a member of the governing board of IOSCO. With his experience in finance and law, Datuk Syed has served on the Islamic Law Review Committee of Bank Negara Malaysia and the Appeals Committee of Bursa Malaysia. To move on and to set some context for this morning's conversation, Malaysia's capital market has been well developed to meet the country's economic development needs. In the last 10 years, from 2009 to 2019, Malaysia's capital market size has grown by an annual compounded rate of almost 7%, to 3.2 trillion ringgit. COVID-19 has indeed set us back. Malaysia's total capital market size has retraced by 2.7% to 3.12 trillion as of May 2020 compared to end December 2019. The government and the SC have been quick in providing relief measures to the capital market. Some of them include waiver and rebate of annual and new listing fees, margin financing flexibilities for capital market participants, and a new 500 million co-investment fund for investments in startup and high-growth Malaysian companies. Positively, COVID-19 has accelerated digitalisation in the capital market. Virtual general meetings are being conducted during the MCO and are encouraged post-MCO. Bursa has rolled out new features on its mobile app, Bursa Anywhere, making it easier for investors to manage their CDS accounts remotely from their smart devices. As we enter the fourth month of the MCO, we are now in the recovery phase. The question is, how do we move ahead in this new normal? To start off, Datuk, what is the thinking behind the recent measures and approaches undertaken by the SC to mitigate challenges brought on by COVID-19?
Good morning, Fad'l, and thank you very much for your kind introduction. Before I think I start to answer your question, it is extremely important that we set the background and the reasons for us to put into place the various action which we have done. I think the key is to understand and appreciate the context and the enormity of the situation in which we are in. Years from now, we will be likely to be looking at 2020 as a general defining moment of health and economic crisis globally and also in Malaysia. And in rising to this occasion, it took, and I think it will continue to take, all of the governments and the broader ecosystem of the public sector to mount a concerted action which is within this, and it is within this broader context in which we should look at the measures that the Securities Commission has taken as part of the overall concerted response. Now, broadly speaking, the measures that we have taken is based on the three outcomes we have set to achieve. Firstly, to maintain market integrity and conduct, as well as fair and orderly market conditions. To ensure the continued functioning of the capital market through this volatile and uncertain period. Secondly, to facilitate relief for issuers, investors, and intermediaries. It was certainly an unprecedented situation for all stakeholders that warranted easing up of pressure points that was starting already to build up. And lastly, to enable immediate opportunities, including market digitization efforts. Now, in coming with these relevant measures, we were cognizant of the discussions that was taking place at the international arena. As you said, I personally have been fairly active in the international regulatory arena, given our role in IOSCO. So the operational capability and financial resilience of our capital, of our market infrastructure and participants were an important area of focus, as well as impact on market-based financing. Now, global regulators continue to direct their attention to investor protection issues, market integrity, and conduct risks, particularly those affecting retail investors. Now, from Malaysia's perspective, industry digitalization have stepped up a notch as an immediate consequence of the challenges posed by MCO. And through the collaborative efforts of the brokerage industry digitization, or as you know, bridge, online opening of trading and central depository accounts without the need for face-to-face interaction and wet signatures have been enabled. And kita in SC has also facilitated for higher daily online trade settlement limit of up to 100,000 for industry players implementing the necessary controls. And in addition, we at the SC has also facilitated a e-corporate action which includes enabling fully virtual and hybrid general meeting by PLC and introducing flexibilities on takeover requirements to enable notification and acceptance of general offers digitally. And in fact, I can tell you, since the issuance of our guidance on the conduct of general meeting in April, 122 listed issuers have conducted fully virtual meetings. And we are also granted time extension for issuance of quarterly and annual reports. And 941 PLCs, at the last count, their quarterly reports have benefited from this for relief, and on an annual report and audited financial statements, it actually covered a total of 652 PLCs. And of course, the waiver of listing related fees has benefited 6 IPOs, 3 of which in ACE and the remainder in the LEAP market. And here, perhaps I should also mention that under the government's Penjana initiatives, funds have been set aside to build capabilities, and provide jobs for fresh graduates, youth, and displaced workers in the capital market. So far, 52 companies have actually indicated to participate in the capital market graduate apprenticeship program. As you may know, this program is a co-investment between participating companies and the SIDC to provide a structured and pragmatic training program to develop talent within the capital market during the recovery phase. And a further 153 applications have been received from graduates for the Islamic Capital Market Graduate Training Scheme. And this we couple with the Corporate Finance Training Scheme will enhance the pool of young talent within the capital market. And next, for the displaced workers, we have started a program for them to be reskilled as marketing representatives through the Market Representative Training Scheme. And apart from providing support to individuals, another important area of focus for Penjana is to provide financial support for SMEs. As you know, the capital market recognizes that these enterprises are the backbone of the Malaysian economy, and we continue to provide various avenues for them to access the much needed capital. Now, as an example, I can tell you that the Malaysian Co-Investment Fund, or MySafe, has supported the funding momentum in ECF during the movement control period, with a total fundraise which increased to 6.9 million in April from 600,000 in March. And this has provided much needed capital for businesses. Now, in addition, SC has also recently introduced flexibilities to enable businesses to issue convertible notes to registered venture capital and private equity firms. The objective here is to provide an alternative fundraising avenue for businesses with growth potential.
Thank you, Datuk. As Malaysia moves into recovery, what are some of the longer-term priorities for the SC and the Malaysian capital markets?
Certainly, I think for long-term priority, as the country moves into recovery, as well as the subsequent reform and restructuring phases, the capital market must be ready to support and finance this growth recovery. And more importantly, for the longer term, at the current stage of economic development for Malaysia, it is my belief that the financial system will be a key enabler to our next leap in our economic transformation. More long-term and risk capital will need to be deployed to economic sectors of tomorrow that will move Malaysia towards a high income status. We will need more dynamic corporate sector to drive us in the next stage of growth, and which requires a healthy and thriving business ecosystem that places a premium on innovation. And there is also a growing trend of corporate and business accountability towards the environment and society at large. Businesses will not only have to lead economic growth, but to be exemplary corporate role models as well. In terms of capital market, investor behavior is certainly evolving, arising from rapid innovation and technological advancement which we see around us. This hopefully in turn will impact the market intermediation models and distribution channels. To keep competitive, however, industry will need to keep up with the ever-increasing pace of innovation and evolution while managing and balancing emerging risks. And there is one major challenge, I think, for the capital market moving forward, will be facilitating efficient intermediation of surplus savings in a low interest rate environment. More effective, I feel, and targeted mobilization of savings to meet the financing needs of high growth companies will create a more diversified fundraising environment, both in the public and the private space. And the sustainability of our growth stage and mid-tier companies depend on this. We see the entrepreneurial drive which is embedded within these companies will be crucial to elevate Malaysia to the next stage of economic development. And of course, established corporates and large-scale national projects will also enjoy the cost benefits of more vibrant market condition. Market stakeholders must also understand the role that we all play in ensuring better intermediation and fundraising efficiency. We must remain steadfast and work together in our efforts to enhance the option available in our capital market. If not, otherwise, we may end up with a limited range of available investable assets onshore, further pushing our domestic institutional funds abroad for better returns.
So just looking ahead, Datuk Syed, what do you foresee, what do you envision as our future capital markets to look like?
My ambition for the future of the capital market, you see, moving forward, we at the SC intends to firstly position the capital market and its supporting ecosystem for a sustainable future. We must enable investors to truly invest for the future by adopting a more targeted approach to meet investment goals with appropriate investor protection. The capital market, I think, must also be able to provide funding for industries at the very frontier of the economy. These are the new growth sectors identified by government and businesses. We must be competitive. We want to have a competitive market and intermediaries, not only domestically, but regionally. And finally, of course, we must also look inwards at ourselves. I intend for the SC to be a future-ready regulator, one that is comfortable operating in an increasingly complex market environment. Now, this goes without saying that we will have to adapt to the new normal. And Fad'l, here, I would like to take the opportunity perhaps to share with everyone a recent development on digital assets. Now, 2 weeks ago, our Sharia Advisory Council of SC has resolved that in principle, that it is permissible to invest and trade in digital currency and in digital tokens on registered digital asset exchanges. Now, this is really a groundbreaking resolution by the SAC that could spur greater development and investments in digital assets. And once the resolution being finalized, we will, of course, issue further details on this.
Thank you. Thank you, Datuk. The Minister this morning in his keynote mentioned new measures to encourage more innovative intermediaries for the industry. Can you provide us some insight on this?
On the more innovative intermediaries for the industry, I think here the key point is to appreciate that the Malaysian investor population has grown to be a lot more diverse. At the same time, technological advancement has changed the way investors interact with the capital market. Now, this creates for more innovative intermediary models in the Malaysian security market to meet the diverse needs of investors, such as digital-only brokers that can cater for investors looking for no-frills investments, or the algo trading platforms or multi-asset brokers for more sophisticated investors. The market can also benefit from clearing-only brokers that provide post-trade services. These are but a few, Fad'l, of examples of what is possible within a more diverse and innovative intermediary models. And of course, to enable this to happen, the market structure will need to evolve and in fact must evolve and change. The SC on our part will facilitate changes to the stockbroking licensing framework that will allow for entrant of new players with differentiated value proposition. And in tandem with this, Bursa Malaysia will also enable separation of trading and clearing membership. And with this, we believe that it will enable more flexible models with efficient capital structure and attract a larger pool of specialized market participants, which we hope will spur greater capital market innovation and enhance value for our investors.
Thank you. Datuk, you recently wrote that the challenges and risks brought about by COVID-19 highlights the importance of board and corporate governance. What are some of the issues and how do we take corporate governance to the next level in Malaysia?
Well, with regard for corporate governance, Fad'l, as you may well be aware, Malaysia was one of the earliest countries in the region to develop a corporate governance framework. This stemmed from the aftermath of the Asian financial crisis if you remember, in 97, 98, and the corporate failures which we witnessed during this period. Now, as a result, this incentivized accountability, ethics, and good governance, which provide confidence to investors. And I can tell you from my own personal experience, perhaps in the late, since the year 2000, I think, when I got appointed on my first PLC board, the development of corporate governance has in fact been quite monumental. You can see that there are more professionals and people with the required skill set are being appointed on the PLC board. And where we are today, more than 20 years later, Malaysia's corporate governance framework is well recognized within the region. As you can see, we rank fourth out of the 12 Asia-Pacific economies in the Asian Corporate Governance Association, or ACGA 2018 CG Watch Report. And the report itself recognizes, amongst others, that the regulators' consistent effort to promote corporate governance and SC's strong enforcement culture, our audit oversight board, was commended as one of the region's most effective audit regulator. And at the last ASEAN CG Awards, Malaysia had 14 companies in the top 50 ASEAN list, the highest among the participating jurisdiction. And in terms of board diversity, we continue to see a steady increase of the number of PLCs that have achieved the target of 30% women on board. There are currently 162 PLCs from 134, I think, at the end of 2014. So you can see that more and more companies have adopted the CG, which has been rolled out. And if we look at the 9-year, 10-year limit, which has been set for independent directors, more companies have adopted it. And what we will find with this is that it will enable boards to infuse new blood with fresh viewpoints and ideas for the continued benefit of the company. And another area perhaps which I should highlight is that shareholders must also play a more critical and influential role in corporate governance. They can keep boards on their toes and engage them on governance issues. Like, for example, they could measure to mitigate corruption risks within a company. They could look at alignment between pay and performance and the management of economic, environmental, and social risks and opportunities. Now, we have also seen that as a result, the preparedness of boards to deal with crisis was also tested during this pandemic period. And pleased to note that board also had to accustom themselves to the new normal, which includes greater use of digital tools for communication, including to conduct virtual AGMs. And Malaysia's CG framework, I think, can be best described as a successful combination of rules and best practices. And we continue to evolve, and as we employ increased use of analytics and behavioral nudges to achieve better outcomes.
Thank you, Datuk Syed. I'm going to touch a bit on sustainability. I mean, that's an area of focus and growth for the SC. Datuk Syed, could you share some of the measures and initiatives that the SC has in its pipeline?
Yes, sustainability is, of course, one of the important areas today. In Malaysia, the Sustainable and Responsible Investment, or SRI in short, is a very key focus area in the development of our capital markets. Our values are similar and have parallels to the principles that underpin our Islamic capital market. Now, in an effort to develop a vibrant SRI ecosystem for Malaysia and the region, an SRI roadmap with 5 overarching strategies was launched. This is to expand the range of SRI instruments, issuers, investors, and ancillary services, as well as to strengthen the information, disclosures, and governance was formulated. And the release of our 5-year SRI roadmap late last year also appears to be timely given the development arising from the COVID-19. So this year, external pressures have increasingly brought to the fore the importance of managing social and governance risks. And then, in fact, management of such risks have emerged as a form of operational resilience for companies. So, in terms of sustainable finance initiatives, we are working closely with market intermediaries to facilitate an innovative structure and framework for Wakaf funds. For Wakaf funds, it's where returns will be channeled to activities with high social impact. And our underlying objective is to enhance the diversity of fund offerings, and we hope these funds can be introduced by this year. Now, from a global regulators' point of view, global regulators also recognize the significance of sustainable finance. In fact, I had the honor to co-chair an IOSCO working group, which culminated in a report which we did and completed in June last year on the role of emerging market regulators in sustainable finance. And similarly so, in the ASEAN regulators, they are keen to develop a facilitative regional ecosystem for sustainable finance to thrive. And in April this year, the roadmap for ASEAN Sustainable Capital Market was published with 15 recommendations to provide broad direction for sustainable initiatives.
Still on sustainability, how does the SC see possible knowledge, skill gaps in companies, and how can the SC support to close some of these gaps?
Thank you. That is a very good question, Fad'l, and that is something which we have focused on. Now, for the SC, we focus on capacity building and the information transparency, which are key elements towards developing SRI into a tangible asset class. Now, in this regard, we have continued to conduct technical workshops to develop understanding of the regulatory requirement for SRI, Sukuk, and ASEAN bond issuance. We are also working to establish a one-stop center for market participants to build knowledge on sustainable finance. Now, while sustainability reporting framework and toolkits are important to guide disclosures, it can only be meaningful when the company boards and management themselves see the benefits of doing what's right and not just what is required. And every single one of us has a stake in this, and we have to work together to raise our standards and our practices.
Thank you. Just moving to a recent topic where on short selling, there was a suspension of short selling. And can you share with us the reasons behind the recent announcement by DSC and Bursa to extend the suspension of short selling till December 2020? What were the criteria used to decide on extending or to lift the suspension? Thank you.
Yes, short selling is always a hot item. But from SC's point of view, we see that the growing signs of recovery, which was still at a very nascent stage, we feel that, and I'm sure you agree, that we are not out of the woods yet, especially in relation to the global economic situation, as well as the domestic economy. As you would know, the MF described the period ahead as one of profound uncertainty. So the decision to extend the suspension of short selling until end of the year is to aim at providing market stability and confidence. And in this respect, we also accounted for market conditions remaining volatile, continued weakness in the overall economic environment, and of course, the re-escalation of the geopolitical tensions, as I'm sure you read the recent news today and yesterday. So the SCN Bursa will continue to monitor developments affecting the capital markets, and we will evaluate the adequacy of existing measures to support an orderly market and to mitigate any possible potential risk.
Thank you. Datuk Syed, the next set of questions are those coming in from the participants today, and some have sent us earlier. I think the first set of questions are relating to digitalization. How has COVID-19 impacted the capital markets digitalization efforts?
Well, the COVID-19, I think if there is a silver lining in the COVID-19, it is the fact that it has forced companies and our intermediaries to ramp up their digital strategies. And they have considered technological solutions to ensure compliance with their legal and regulatory obligations. And as I earlier shared, there's some markets with regard to their digitization efforts. And you can see that since March, there is certainly a greater resolve and collaboration from all stakeholders to find a workable solutions. And there has been a good buy-in, in fact, for some of our initiatives. So the SE will continue to facilitate digital offerings and solutions for the capital market. We will continue to press on with regulatory reforms that will facilitate business processes and regulatory reporting via digital means, including submissions, advertising, and service of notices by the SE.
Thank you. In the interest of time, I'm going to pick out one more question from the participants. It reads, individual deposits in the banking system has grown from 379 billion in early 2010 to 779 billion as of May 2020, about half of the market capitalization at Bursa Malaysia. What are the plans to capture some of this liquidity in the Malaysian capital market for the longer term?
Yes, this is quite an important area. And as I've alluded, Fad'l, earlier, there's a need to intermediate this surplus savings. We are certainly open to discussing with market participants on how the capital market can best serve investors' needs as well as provide fit-for-purpose solutions. So much of our economic growth today is driven by smaller, innovative businesses that are outside the public market, as you know. And I believe that investors recognize this, and that is why increasingly they are looking for private markets for return. So from a development perspective, our mid to long-term strategy will focus on widening the range of investment products and access points, including facilitating alternative investments in private markets.
Thank you. We're coming close to the end of this session. Datuk Syed, would you have any final remarks or comments to share with all the attendees of this event?
Well, I think to end this, I would just like to emphasize the point that which I made at the beginning, that we are currently living through a very generational defining moment. Our global health crisis and the economic dislocation that we are facing has indeed led to significant hardship to many, including in Malaysia. However, this pandemic is also a moment, Fad'l, it's a moment of opportunity for us to reflect current landscape and system that we have, and more importantly, for all of us to consider how we can rebuild for a better tomorrow. And we can also look at how we can create and develop a new future which is more resilient, sustainable, and inclusive. So the pandemic might be a defining crisis for this generation, but we have the opportunity to rebuild a better future for the next generation. Thank you very much, Fad'l.
Thank you. Thank you, Datuk Syed, for taking the time to join us today in answering all the questions and sharing your insights and views. I would like to take this opportunity to summarize the key takeaways of this session. I think firstly, amidst the current backdrop, the SE will position the capital market and support the ecosystem for a sustainable future with targeted growth and approach to meet investment goals and investor protection. Sustainability will be a key area of growth. It will continue to be given emphasis in the new normal. And lastly, SE will continue to facilitate digitalization through regulatory reform to facilitate business and regulatory reporting. So with that, I would like to thank all of you for attending this session. Stay safe and keep well. Thank you very much, Datuk Syed and everyone. Thank you.